Welcome to Trading Lounge and the US indices for Friday, March the 18th. And first of all, I'll need to apologise for not answering everybody's emails, just having a bit of difficulty with the fractured collarbone. So, okay, so look, we'll be looking at a bullish count and a bearish count. This is a bullish count. This is our original count going back looking for a low at 4.1 here at a 38.2% retracement level. There's a better way to count this, and we can look at that as well. But the main point really is that we're trying to figure out if we've got 1 and 2 and 1 and 2 here, right? Or we've got some sort of A, B, C here for a corrective move and then down at that point. The only way I can think to solve that is simply by looking at this particular move to the upside here. And we know that we're close to a top because you can see the range in the bar. So this range in the bar in comparison to the previous bars here is reducing. So yeah, it's sort of ending at that particular point. Now the other point here too is that if Friday closes strong and firm, well then Monday's likely to follow through. So a strong closing on the Friday would indicate a more bullish market. A weak Friday close or a lower close in the red would indicate that we're going to have a turn in the market. So what we're thinking is that in one way or another we can count this as 5 waves to the upside. We can see that it's kind of getting close to an end there because it's tiring out into the old high here. So what we're looking for is an ABC to pull back here, and with that ABC, once we've got the top in, we don't know where the top is going to be, and we can talk about that, but once the top is in, and we'll only know it's in because the market has pulled back. But that top there becomes really significant, so we can put a green line on that and a green light really and trade long above that. But of course we always try to look for a better position, so we can come down to the second high here, which would be either an A and a B and a C wave, so the B wave there, or it's going to be down for 1 and back for 2, and we can still put it on top of wave 2 there as well. That would be safe at that point, but a breach of that would put us on the long side at that point. So that would be the safe trade to the upside, because we don't know if this is going just to continue down at this point. That's the other side of the coin at the moment with this. So there's a good case for both sides. The other way to count this particular larger pattern here as well, as we've looked at this many times, is this one here. So just a WXY to this particular point here. So that's it on the bullish side really. The other thing I can mention here as well is that the 5 here, the 4,500, the 4's not that important, it's about the 500 here. We can see that that's the balance lines through here. So that's really significant, isn't it? So let's just assume that the market does push up to that point there. Well, then we would look for a classic trading levels pattern sitting on that level as the entry, and then we could be quite comfortably and confident that we would be bullish at that point. So at the 4,500 here, the arrival, the reaction, the ABC pattern here, and then getting back up on here, migrating from resistance to support. This is the pattern that we use, and we have that entry there. We start from the top and then we work down until we get clicked in. If we don't get clicked in, it means that we've been kept safe, and we would see more bearish side at that point. But buying new highs above the level is the simple little trick that we can use. So a bit like this here, that was a high here, we could have gone long above that one, didn't get triggered. We could have gone long above that one, that didn't get triggered. Look, it doesn't always work, but it's pretty damn good over a period of time. It's going to give you it's going to tick a box for gaining an edge, and if you don't have an edge, well then you're not going to make money. You need to know what your edge is. So look, so from all of this, just going back here now, let's just go to the intraday. I'm not sure where we were. Let's just go to that one. Oh, the other bearish count is this one here, sorry. So we were looking at this as a possible triangle pattern here, or a flat correction. Obviously the push up here has negated the triangle pattern, but it does leave the flat pattern. So you put all the counts on the table and then you eliminate them one by one. So this is a possibility here, So once again, we need to wait for that move to the upside here to complete, and that's what we were looking for. And we were figuring it would come in around the old highs here, so we're pretty close to that at the moment. So we need to go in and understand this particular move here. So so where were we on this? Let me just have it written on the date. Normally got it written on the chart here somewhere, but anyway, let's just cruise into the 2000 tick and see where we're up to. Okay, so this is one way to count this. This would be the sort of straight up sort of logical count, or well, I don't know about logical, but we can count 5 waves to this point, right? We can count 1, 2, 3, 4, 5. It's got some definition in there. Normally when it's got good form like this here, it would be the third wave at that point. But the trouble with calling this the third wave here is it's pulled back, well, roughly 61.8%, 62%. So that means that, well, we don't have to call it a wave 3. We could actually call it a wave 1 and 2 here as well. So we could go wave 1 here and wave 2 here, and then we could also go wave 1 here and wave 2 here. We'll just come back to that in a moment, and because we need to talk about that possibility as well. So in this instance, we've got just pretty straightforward here. We've got this as 1, 2, 3, 4 here, and then going up for 5. And in going up for 5, we'll put this there as wave 1 and 2 here. And then I'm calling all of that wave 1 now. I have pulled it apart. So wave 1, 2, and 3, and 4, and 5. So I'll just draw this out here. So 4 and 5 here for this one, and then this one here for wave 5 here. So that will take us in roughly to the old top, and then we'll have a correction at that point. So it's this correction, this top here, that we can go long on, but we won't, you won't know that top's there until the market's pulled back down. But then going long above that top's a long way from where you are now, so you obviously want to get in a little bit earlier so we can move into that one. But this is where you need to be careful, because it's at this point where the market can just work lower from that point. And if you can see that 3-wave structure here, let's just say, as an example, this previous one that's just sticking out here. So this, if you get, say, this A, B, and C here, right? And then what we're looking for is that market to go up like that. So in this case, we've got this 3-wave move here, and it takes out that top here. So then we can go long in that point and stick the stop underneath and all that sort of stuff. But you see that 3 waves there. So any breach of that 3 waves here, then you could go short from that point. So you could also go short. I'll put it in green here, so we can go short from under that one. But you won't. That will push up there, but you won't know that it's going to trigger this at this stage, because it needs to retest something up here. It's like this one here needs to retest up there. It came back. You don't want to go early. It must be a clear, breach. And then you can go short at that point. But if you can see those 3 waves, because that's going to be an ABC, like this is going to be an ABC, but we don't know that at the time. This could have been a top here, because we could have gone 1, 2, 3, 4, and 5 here. We could have had that top in play here too, couldn't we? Do you know what I mean? So this is exactly the same example of what we're going to be seeing here. So 1, 2, 3, 4, 5 here, and then this little ABC pattern here. You could go short under that, because that would be 3 waves, and that would be, but any move below that 3 waves would make it bearish at that point. It could turn into 1, 2, 3, 4, 5 down here, and then have an ABC back up, and then another 5 down. But at least it gets you to break even, or close to break even, so it helps you manage your risk at that point. So so this is a really good example of this situation here that will just be a little bit larger at this point, because we're dealing with a bigger structure. So look, in a nutshell, that's what we're looking for in terms of going long and going short, and that's what we talked about yesterday as well. So we just need to go with the same process, because we don't know when we get to the top here if this is going to be an A and a B and a C wave here, and then coming down, or do we call this wave 1 up here and coming back for wave 2? So that's what we've got to figure out. Now, the other thing that I wanted to talk about is that you know, sometimes when the market, you know, when the market moves along, it will go along and give us like a nice 5-wave structure, so to speak, and that's kind of what we're looking for at the moment, like this. And then we're looking for our ABC pattern, and you know, and just when you're looking for that and going along here and think, okay, if it's going to be bullish, we're going to get that. That's not a problem. And then you get something else. You know, we get something that's like this. We're looking for 5 waves to the upside, so to speak. And it just doesn't give us that 5 waves. For some strange reason, it just keeps on climbing, you know. And this is what this could be here. You know, this is what I sort of referred to as before. So in this case, if I can just copy this and just follow me along here, it just, what is sort of, let me just, so yeah, so it could get into a situation where we get like, you know, we get like this, you know. And this is the other situation that we need to be aware about, you know, aware of rather, you know, that it just continues to climb, you know, because for whatever reasons that are, you know, whatever the sort of sentiments driving the situation, but we end up getting, you know, a much bigger thing to the upside here, you know, and on it goes, you know. So if it does that, if it doesn't basically, let's just get in a bit more data here. So this is the old high here. So this particular price point across here, the 4,400, it's carrying a bit of weight, isn't it? So you know, it's going to have a little bit of a dance across here. We'll see how it goes here, and then we're expecting it to turn. We can expect it to go a little bit higher than the high, and then we're expecting it to turn. But if we get this pattern here where it just doesn't want to stop and it's just a freight train going through, then we need to, you know, we need to understand at what point we should be, you know, how do we handle that? So I'm thinking that we're lucky to have this number here, the number 5. It's really all about the 500. So the 5 is the second strongest number. So that means that, you know, we've got all of this over here from before over here. So it's highly likely that we're going to get some sort of resistance at this point here. So this is the point where we can use, you know, a classic trading levels pattern at this point here. So it would have the arrival, the reaction, the first high above the level, and then we would have to go from this point. So you may have to wait for that, because it's pointless going, if this just continues up here, you don't want to be going long just before that number there, because you're going to get something like this, and you're better off just sort of, you know, looking for the pullback and working that at that stage, you know. Whatever the price, you know, it may not be a wave 3 here, or maybe a 1 and 2. I don't know. It just depends on how the structure goes. But we should get something like that at that level. So this is really for trend traders, because if we get this here, then we can move up to the 4.8, and then we're going at that point. But above this level here at 4, we've got 1, 2, 3, 5, and then 8. Right. When we talk about 8, we talk about group 2, so that's 65, so that's 4,650. I might not be able to get it right on there. And the other one is the 4,720 in here. And that's group 2 there. So we know group 2's got its own story. If you get support within group 2, then you know that you're moving to the upside. So this top here could also be, well, it could be at 600, but if this 650 here becomes the support, then if you get a classic trading levels pattern in there, it will be small, but if you get one in here and get support on that level, then you're leaving this number here at that point, the 500, and you'll be going to the 800 at that point, and then it will climb up. It will take a bit of time, and there'll be corrective patterns in here, but this is a whole new space that needs to be treated differently. So yeah, so this is what I'm thinking, you know. I mean, you may have it in your mind that we're bullish or we're bearish and all the rest of it, but for me, I need, Elliott wave is good. Elliott wave is fantastic, and the reason it's fantastic is because it links all the patterns together at all the different degrees of structure. So that's what I like about it, and it also tells you if you're getting an impulse wave, that's giving you the direction of the market as well. So there's a lot of advantages to it in helping you get the direction of the market. The trading levels helps you with the timing of the market, of when to get in and out, and this is what we're talking about with all of this here. So it's not perfect. It's not it's not a trading system, the Elliott wave. It's more market behavior, but we're sort of using that to help us. So you need to strengthen it up, and indicators are good as well. I prefer the stochastics just to help out with a few things. Like I can see this is pulling down here quite fast, so I know this is not pulling down as fast, so there's divergence in that price there. So I also know that it's at the 400 here. I'm quite good with the price over here, so I could look for, we've got a little classic trading levels pattern there, haven't we? So that kind of thing comes in handy. We've got the arrival, the reaction, the first high above the level. So if you know that, that's half of the correction that's half of the pattern to the upside, isn't it? We've got the arrival, the reaction, the first high above the level, and we're down here somewhere now. So you need to get this part of it, but you could bring the entry down from here to here to here. So anyway, all of that's that. So that's that. So look, this is the same story that we're working through with stocks, and it's really the same story that we have to work through with the NASDAQ as well. Now, I can put a low in here for the NASDAQ on this low here. That's not a problem for me to do that, but at the same time, we need to be aware of that move to the upside there as well. So it's the same thing. Some of these moves to the upside, I've counted this here a little bit differently because it can be counted differently, and I think that's sort of interesting because from this low here being very clear, it's 1, 2, 3, 4, and then 1, 2, 3, 4, 5 here. So it makes a nice impulse wave all the way to here, so an A wave and a B wave, and then I can see it's really struggling here. I could look at this as 1 and 2 in here and 3 and 4 here, and then going up for 5 here, but I think it's still got further to go. I should take that off there. That's not good. But yeah, so we'll just see how this plays out. I don't want to call the trade in here, but the arrival, the reaction, the first high above the level, but I think it could have a little bit more to go in all of that. I need to wait to see on that one. I could just look at the triple Q for a moment to see if that's got any sort of clarity on that. Just bear with me until it rolls up here somewhere. The triple Q, I've got a low in for that there anyway. So as an A and a B and 1, 2, 3, 4 and 1, 2, 3, 4 and 1, 2, 3, 4, 5 here. So this is looking a little bit better. It's probably 1 and 2, it's the same sort of thing here. But yeah, I can see it needs to go up further. Anyway, that's not going to be that helpful. And the Dow, so with the Dow Jones, I can call this in here from the top here. I don't see any problem with this. There's an A wave, a B wave, and a C wave here for wave 4. And then looking at this as wave 1 here and 2 here. And looking at this as wave 1 in here for this, and 2 here, and then wave 1 and 2, and building to the upside here. There's a few resistance points here. The 35 is the big number here, so we could have a B wave, all of this down here for the A wave, a B wave, and then down for the C wave here. But getting support on this level here, I know it's a long way away, but still, if you were long down here, well then you're laughing, but going long in this space here would be a little bit dangerous. So if you were doing that, you wouldn't overdo it, but getting support with a classic trading levels pattern on 35 would be the go there. The Russell, as you know, we've been looking at this as being bullish as well, with a low in place and wave 1 here with an ABC for wave 2, and then looking up here. So also here, just like the S&P, we wanted to we wanted to make sure, because we could go, this is a WXY here, that's why they're there, and we can just come down from that point. So we're waiting on a pullback here. So look, I just think at the end of the day, Friday could be, which is obviously today in the next session, if Friday ends up, if you see weakness in Friday, then you know that we've got a top in play. Now, it doesn't mean that we're bearish at that point. It depends on how it closes. If it closes really deep and, you know, it's down over 1%, well, then it's likely to follow through in the next session. But if you can see that it's kind of producing an ABC correction here, well, then we can look to go long on the, you know, on the Monday or through that correction here. So, yeah, we just need to give it some time. I know that's. I know I said that yesterday, and the market has moved up, and that's a real sort of pain. I understand that, but I'm talking about is this wave one, is this wave two, is this wave 1 and 2 here? And if that is the case, then we know I'm looking for the trend that's going to take out this top here. You know, so I'm not sort of focused on intraday trading at all, you know. So you can just go into the ETF and trade this or the futures or whatever you're going to do. But we need to confirm, you know, I'm trying to confirm that that the whole trend is starting to the upside. And I just need to be sure to be sure. Alrighty, thanks for tuning in. Enjoy the weekend. Cheers.